We keep hearing a lot about banking regulation on the campaign trail. Do you think that Dodd-Frank will really make a difference? Because there were very high expectations for Sarbanes-Oxley, and that seems to have fallen by the wayside.
Yes. I think that Dodd-Frank is all about how the regulators implement it. Dodd-Frank is really primarily a grant of authority and a directive to the regulators to fix these problems. So we have the Volcker Rule designed to end prop trading in safety net institutions, bank holding companies. We have risk retention designed to make sure that if you securitize loans, you have to retain some of the risk. You don't pass it all off to investors. All of these areas, living will authority, the requirement that large institutions have to file with the Fed and the FDIC a plan that shows how they can be broken up and resolved if they get into trouble in a bankruptcy process without hurting the rest of us. Capital requirements. All of these are generally directives to the regulators to write the rules implementing them, and only until the regulators actually write the rules and have them become effective does Dodd-Frank come into effect. So it's really all about the regulators. And I think the regulators, frankly, get a mixed grade on this. There have been big time lags in proposing these rules. When the rules have been proposed, they are frequently very long, complicated, riddled with exceptions. And I think a lot of that has been due to very intense industry lobbying, asking for all those exceptions. But also, the regulators have been negotiating among themselves, too. One of the recommendations I make in my book is that we should reconstitute the Financial Stability Oversight Council, also known as the FSOC, created by Dodd-Frank, make it an independent entity, and give it the authority to write the rules. And each of the individual agencies would be represented on the council so they could vote and have input on the rules, but have them write one entity write all the system-wide rules. I think that would really streamline the process.
Another way, as Governor Mitt Romney said during the debate, is he could just repeal Dodd-Frank. Now, as a Republican, which you claim to be in the book, so what's your response to that?
Well, he says repeal and replace, and with what? Again, a lot of the things that he has identified, like higher capital standards, risk retention for securitization, mortgage lending standards, which I agree with them, this should have been done long ago, and it's frustrating that we don't have the mortgage rules in place, as well as risk retention for securitization. That should have been done. But again, Dodd-Frank just grants authority to the regulators to do these. And if he becomes president, he will have a lot to say about who holds these regulatory positions. And hopefully he will appoint people who are committed to effective regulation, not overly bureaucratic regulation, but simple, effective rules. And so everything I've heard him say he wants to do, he can do within the confines of Dodd-Frank. You reopen it, rewrite it all over again, that's going to be at least a 2-year process. It's going to further delay reforms that need to have happened, frankly, a couple years ago.
And if President Obama wins, do you think we'll just get more of the same? Because you were highly critical of his Treasury Secretary, Tim Geithner, throughout the book. I don't know if Tim Geithner is going to be returning if Obama wins another term, but do you think we'll just get the same old, same old?
Well, I do think this is, and you know, I always hasten to point out that I think Tim always did what he thought was right, but I do think he tended to view the world through the prism of very large New York financial institutions, and their interests and the broader economic interests are different, and he never identified himself as a regulator, even when he was the head of the New York Fed. He didn't identify himself as a regulator, and I don't think he's a regulator at heart. And so, yes, people in these jobs who have a role in this need to have track records of independence, track records of commitment to doing effective regulation. And Mr. Obama, I think, will hopefully look for people like that in his second term.
Is it hard to have independence in government when, for example, Jamie Dimon is testifying about the London whale trades to a bunch of congressmen whose campaigns he donated to?
Right. Well, yes, and several of them had staff that are working for him now, too. So, you know, it's all over the place. It's not just the campaign contributions, it's jobs, jobs for members, jobs for their staff. And that's not to say that it's necessarily nefarious or people of integrity that go take these jobs, but nonetheless, even the best of people can have their thought process corrupted, and just the optics of it, even if there's nothing nefarious going on. And Congress is not, you know, I wish to say I used to work for the Senate. I'm a creature of Congress, and notwithstanding the problems they have now, I respect Congress and I want them to succeed too. But they have frequently been part of the problem. They beat up on, you know, they don't get tough on the banks. They beat up on regulators if there's a problem, but behind the scenes they're whispering to regulators, don't be too tough. Or they're trying to hold their appropriations back, as we've seen with the SEC and CFTC. So Congress is part of the problem here, definitely.
Well, you could go back and try and be the solution. Your friend Elizabeth Warren is trying to do that in Massachusetts, and you speak highly of her in the book. What are your plans now that you've written the book?
Well, I am enjoying my life right now. I'm doing policy work at the Pew Charitable Trust. I'm chairing a group called the Systemic Risk Council. It's a private sector group. We monitor the pace of financial reform. It's a wonderful bipartisan group. We've got my old boss at Treasury, Paul O'Neill, Paul Volcker's on it, Alan Simpson, Senator Bill Bradley, Brooks Lee Boren, Bill Donaldson. It's just some wonderful academics. It's really a great group, and we just issued a letter yesterday on capital standards. So that's a nice platform, and I have the book of my public speaking and my column at Fortune, and so life is pretty good.
But you're not closing the door.
No, but it's not something I'm looking for, and I actually find that I can stay very effectively involved in public policy through policy work at Pew and through my Fortune column. So one way or the other, I'll still be having a say about it, and hopefully trying to drive all of this in the right direction.